So, welcome to day 3 of the path to consistent profitability. Uh, by this point, you will be working on your mental game. You will be making sure that you fully understand and accept deep inside that you can do this. You can absolutely get consistently profitable. You will also have 6 strategies that really interest you and excite you. And so day 3 is about starting to pare those strategies back. So it's about backtesting. I'm going to link the tutorial for backtesting that I've already done, and we'll attach the backtesting spreadsheet. It's a very simple backtesting spreadsheet. There's not a lot of criteria on it. It's just meant as a starter to get you going on backtesting. And what you want to do is you want to backtest those 6 strategies. Now, in the video, I say that backtesting doesn't take very long. It shouldn't take very long at all, maybe a couple of hours. And that's true for day traders and swing traders. But if you're a position trader, um, backtesting becomes more important because forward testing would just simply take way too long. You could be forward testing for years. What you want to do, if you're a day trader or swing traders, you just want to go through, document. I'll show you how in the tutorial. I'll be linking it. You want to go through and take a look at the charts. You of course want to record the events and see how everything works out, how the trading strategy would behave under different market conditions. But you also just want to note things like, for example, would you get into an entry as a swing trader and that entry just drops down? It doesn't stop you out, but it just kind of goes sideways and you'd be red for, say, 2 weeks before you eventually get stopped out. Is that something that you feel you could psychologically handle, or would that just be kind of really upsetting to you? That's just an example. Or as a day trader, would you have a strategy where you win a lot? Say you win 90% of the time, but then when you lose, maybe you lose once or twice a month, and that one loss can equal 10 winners, because that's the way a strategy works. If you win 90% of the time, generally when you lose enough to give back the last 9 gains. So would that be psychologically damaging to you? So again, what you're looking for is a strategy that you like. So your homework for today is to watch the rest of the video, watch the tutorial, understand how to backtest, and then go ahead and backtest the 6 strategies and start paring them down. Start taking some of them out, because ideally we want to get down to one strategy. So let's start learning how to backtest, and let's start paring down your 6 strategies into only 1 or 2 that are your absolute favorites. In this video, I'm going to show you how to do a proper backtest. Now, I talk a lot about how my very simple quantitative analysis approach, remember, simple is powerful. A simple quantitative analysis approach is taken from how institutional investors, hedge funds, how big banks do it. There's a lot left up to interpretation with trading, a lot. But this one thing is not. Everybody does the same basic structure to develop a strategy, and I'm going to show you how. The difference is it's not quant level hedge fund type stuff that's overly complicated that the average person can't figure out. I figured this out. I'm going to pass it along to you. Is it going to require some thought? Yes, it's going to require some thought. Are we going to have to learn some new things? For sure. But I think you probably expect to learn some new things. You want to learn some new things if you're here. So, with some practice, you can get good at it. With some time spent with it, it's easy enough to understand. Another thing about a backtest I've mentioned before, I'll say it again, backtests should not take weeks or months. Backtests are like a 2-hour endeavor. So I'm going to hop into the chart here. We'll go over the spreadsheet too. The spreadsheet is free. There will be a link in the description. Okay, first I'll start off by introducing you to this spreadsheet that I made for everybody. These blue fields right here, these are the fields that you would go ahead and put your encounter. So when you see a price, put your entry price in, put where you would have stopped out, and put the exit price, whether that, I'll show you. And then, of course, want to tag it as a win or a loss, depending. Um, these fields, all the rest of these fields will all just come out on their own. They're all formulas. So numbers will automatically fill in here once you fill in these fields. This is the only other field that you need or can. You don't have to put anything in here, but just put your risk amount. How much am I willing to lose per trade? So then that'll allow other fields to populate. I tried to keep this as simple as possible, but I can see that I probably overdid it a bit. There's a lot of metrics on here. So I put in these notes here, these little black triangles in the corner. This is a note. So this explains what the win rate is. That one's probably pretty easy to understand. Percentage of your winners versus your losses. Profit factor, this is basically how much are you making? It lets you judge how profitable this strategy is compared to other strategies that you might be back testing. Expected outcome, these are professional grade. I didn't take a lot of professional grade metrics that you can get off the data you collect, but these ones are the most common and the most powerful metrics that people use in quantitative analysis. And I know it's a bit of a stretch. I know it feels like a lot to learn initially, but trust me, after you play around with the spreadsheet two or three times, it'll all start to make sense. Average risk to reward is just how much are you making per trade. So, after you add all your winners up and all your losers and you average them all together, how much are you making per trade? Or in some cases, losing, which means that you don't have a great strategy. You probably want to move on from that strategy. And then this profit per trade, I just threw this in because it allows you to put a dollar amount on it. So it's basically like this expected outcome, what's the average you're making per trade? And then I multiplied that by your risk level. So the number that you put in here so that you can get a dollar amount. So if you're risking $200, well, you'll see. These will fill in. If you're really, really new to this, you probably shouldn't worry about these quite yet. I would just focus on wins and losses and your win rate percent to try and see if you have something. This is showing up like this right now because we don't have any numbers in there, but I also included this chart so that you can get a rough idea of expected outcome. Because for somebody who's new to this, you're just not going to understand like what is expected. There's no reference. You're not familiar with this. So what does that mean? For all of your trades, when you average all the winners and losers together, you'll be making 30 cents on the dollar. So we've already factored in all the losses. Factored in all the losses, they're all taken care of. They're canceled out by some of the winners. And after you use all your winners to cancel out all your losses, you'll be making 30 cents on the dollar. This, by the way, in institutional level strategies, would be an excellent expected outcome. But we're retail, we have to trade a little differently. So I've got 50 cents on the dollar, 80 cents on the dollar. I got dollar for dollar. So you're actually making you're making like a 2-to-1 type trade situation where for every dollar that you lose, you're making an additional dollar. So you got $1, the win canceling out $1 loss, and then you have another full dollar that you're making on top of that. So if you're placing an average of one trade per week and you have an expected outcome of one, that means that you can make 50% on your account in an entire year with proper risk management. It's not, you're not risking the entire account based on that, but with proper risk management, you can make 50% per year. And as you can tell, this is not really, towards day trading. I hate to like, I don't dislike day traders. And this method, by the way, is extremely powerful for day traders. And day traders should definitely be doing quantitative analysis. They should definitely be backtesting. It definitely helps to understand. So, I mean, we could do a revised version of this chart if we get a lot of day traders that are interested in this, but there's already so much information out there for day traders that I customize this more to swing traders and position traders. So If you only placed two trades per week and you had an expected outcome of one, that would make 100% on your account. You don't have to day trade to get powerful gains. You're only making two trades per week, but you have a really good expected outcome. You're making, when you win, you really win, then you can make 100%. You can double your count in a year. And so you can go through the charts and kind of get a feel for how much of a difference it makes when you get strong winners. That makes a big, big difference. You don't have to place a lot of trades if you've got a really good quality setup. So I'm sure that you guys will have questions on this. Please leave them in the comments. Like I said, I put my email in the description. Please email me. If there's a lot of, I'll try to get back to you with questions. I'll try to make videos to answer questions. Um, like I said, if you're new to this, this is going to be a lot for you, and that's okay. Just start simple, start with this, and then eventually we'll get here. Ask me questions and we'll get here. Okay, let me get an example chart on the screen and we'll get an example trading strategy and we'll start filling in some numbers here. So I've loaded a chart of Palantir here. I've already identified all of the breakout levels that we might want to trade. I included this mean reversion breakout here, as that's worked really well in the past. And what we want to do is we just want to start recording some entries. So we had a breakout over previous highs here on July the 14th. So I would go ahead and record this. I mean, this is just a back test. It doesn't have to be perfect. So I'd probably record that at about 149. Um, the stop out is a little bit hard. Like, do you stop out at the bottom of this green candle? You might that, but it all depends on your personality. Are you the type of person that's really okay with having a bunch of small losses, more than usual, small losses, but then your risk to reward is quite great. It's quite a large risk to reward. That's a big move compared to how much you risked. Or are you the kind of person who doesn't want to get stopped out? So you might set your stop out level more here at, say, 127, 128, somewhere in that area. In which case, the move upside is not as good compared to how much you risked, but you're probably not going to get stopped out that often on this move. So it just, again, this is where the chart can tell you what kind of personality you have. While we're on this subject, here's another example. So you got a breakout entry signal here over recent highs, but then the thing chopped sideways. If you entered on September the 18th, it chopped sideways until September the 23rd. You could even argue October the 23rd, sorry, you could even argue that it was October the 24th. It was still chopping in this range. That's hard psychologically. That's very hard emotionally. So are you the kind of person who is just okay with letting this chop sideways? I don't have to check the charts. Whatever happens, happens. Are you okay with that? Or are you the kind of person who wouldn't be able to help themselves? They would have to check the charts 4 or 5 times a day. You'd have to be checking your brokerage account. And then you'd see this move where it almost broke out. And you're like, all right, we're going to make some money. And then you got this big red candle. And if you're that kind of person, then you definitely stopped out here for a loss. And you basically took a loss on this move that could have turned into a decent win if you were able to hold on to it long enough. So that's what I mean by you have to see if you like this strategy. Maybe you like this, you're okay with that, totally fine. But if you don't, then then maybe you just don't like this strategy. This is not something that you would want to trade. So you need to decide that for yourself. And going through the charts and backtesting, it's a good way to do that. So I went ahead and recorded a bunch of these trades here already. I basically recorded all of the occurrences that happened. So I'm going to go ahead and we can take a quick look at this. So at the most basic level here, we got 5 wins and 3 losses. So that gives us 62.5% of the time we're winning on this trade. Profit factor of 3.82. So if we remember here, we can go up to our note and it just lets us compare this strategy to other strategies. So it's winning 3.8% or 3.8 more times than it's losing when you factor in all your wins and losses and how much you're winning and losing. So that helps us to compare strategies. Our expected outcome here, of course, is when we add all our winners and losers together, how much excess are we left with? We can go down to our chart. We're approximately close to one. If we were taking an average of one trade per week, then we could potentially make 50% annually on, given, reasonable risk, we could potentially make 50% annually on our account. Profit per trade, we were making an additional $200 per trade after we paid for all of our losers with some of our winners. Then we were still making $200 per trade, which is really good. In this small data set, we're recording about $1,700 win based on only risking $200 per trade. So that's a really strong outcome. Let's ground a little bit with reality here. Reality is we've only recorded 7 instances. So we need probably 30 to 50 instances. And as we go 30 to 50 instances and you go back a year on this chart or however far you got to go back to get 50 trades, you'll see some of these numbers will smooth out a bit. You might not have such a strong strategy, but it'll still be a really strong strategy. And you'll see this number add up over time, and you'll be really surprised how if you just risk a little bit of money and you have a really strong strategy, the outcome is that you make a lot of money as long as you trade it according to the criteria that you've identified. So as I mentioned, the link to this spreadsheet will be in the description. If you're new to this, some of these metrics are going to be difficult to wrap your head around at first. That's why I'm also putting my email into the description so that you can email, ask me questions, stick to some of um, these more basic metrics that are easier to understand at first. And then over time, if you're having trouble understanding this, send me an email. By all means, we can go through this. I can produce some more videos that answer some more questions. Another note, I put a note here on how to download the strategy. When you click the link, it's just going to pull up this spreadsheet that I have on on my Google Docs. To make it your own, you need to click, I've explained, you need to click File, you need to click Make a Copy, and then you need to save it to your own drive. Alternatively, there is an option to just download it into Excel, which you can also do. So I think I'm going to end the video there for now. I think that's a lot for everybody, especially if you've never done this before. I've made it simple enough so that retail traders can understand it. If you're using this method to learn how to develop a strategy, then the trading part just comes, right? You develop the strategy, you get really familiar with it. The trading part is just a natural progression of having done all of this background work to learn the nuances of the strategy, to learn how to refine it and how to make it your own so that it suits you. So I'm going to leave it there for now. As always, leave a comment, like, subscribe, and I'll catch you on the next video.